In today's video, we're diving into a topic that often sparks curiosity and intrigue among investors: insider buying. Additionally, I will share the websites I personally use to keep track of insider buying and what stocks super investors like Warren Buffett add to their own portfolio. So get ready to demystify insider buying and add another layer of understanding to your investing journey. Don't forget to hit that like button and subscribe to our channel to stay in the loop. Let's jump right into it. There are a couple of reasons why it's interesting to look at insider buying. The first reason is insider knowledge. Insider buying is often interpreted as a positive signal because insiders possess comprehensive and detailed knowledge of the company's internal and external environments. If insiders believe the stock price doesn't reflect the company's potential, it could present a buying opportunity. Insider buying can indicate that the stock is undervalued relative to its true worth. The most important person to look at when it comes to insider buying is the CFO. Observing whether the CFO is buying stocks as an insider is significant because the CFO possesses the most comprehensive and detailed understanding of the company's financial health, profitability, and risk management. In addition, this person is closely involved in strategic decision-making, such as mergers and acquisitions, capital expenditures, and other significant investments. The second reason is a show of confidence in the company. Insiders, with their intimate knowledge and involvement in the company, are in a unique position to assess its prospects. When they purchase shares, it is often interpreted as a vote of confidence, signaling to external investors that those with the most comprehensive understanding of the company believe in it. This can be a powerful indicator of the company's potential for growth and profitability. Then there is the alignment of interests. Insider buying also aligns the interests of company executives with those of shareholders. When insiders invest their own money, they're incentivized to make decisions that benefit all shareholders, striving for long-term growth and success. It could also be looked at as a contrarian indicator. Interestingly, insider buying can sometimes serve as a contrarian indicator. If insiders buy during times of market pessimism, it suggests they see potential for positive developments that the broader market may be overlooking. The last reason is the potential for positive news. Moreover, insider buying often precedes significant company announcements or milestones. By paying attention to these transactions, investors can position themselves ahead of potential stock price movements. There are two websites I check regularly to see which insiders at different companies are actively buying stock. The first one is Dataroma. Dataroma is a website that provides investment tracking and portfolio management tools for investors. The platform provides information about the portfolios of well-known successful investors, so users can gain insights into the investment strategies of these investors. Now, you do need to pay attention when looking into the stock purchases of those value-oriented super investors that are monitored by the website. This is because these insights are not real-time. The portfolio holdings are usually reported mid-quarter and show the investment schedule at the end of the previous quarter. This means that the reported transactions could have taken place at any time during the quarter. I would also like to point out that all the super investors tracked on this site tend to be long-term investors with time horizons of at least 3 years. Some, such as Warren Buffett and Seth Klarman, invest for the next decade and beyond. This, the so-called time horizon arbitrage, can be used as an advantage over the short-term thinking, herd following investors who constitute the stock market casino. Dataroma also monitors insider buying and selling on the US stock market. Unlike the trades of super investors, insider trading is being tracked in real time due to laws and regulations. If an insider makes a transaction, they must file Form 4, Statement of Changes in Beneficial Ownership, within 2 business days of making the transaction. This form serves to notify the public that an insider acted on a security. Another free website I like to use to monitor insider trading is Insider Screener. Where Dataroma only looks at the US stock market, this website gives you insights on most European markets, Australia, Canada, and even India. You can filter on buy and sell transactions and select which market you want insights on. Both websites present the information in an easy-to-navigate and user-friendly interface. Now here is a real-life example of insider buying. Skanska is a company that is listed on the Stockholm Stock Exchange and is involved in building construction, civil engineering, and infrastructure projects. Let's have a look at the insiders. In this scenario, we have the CEO, CFO, the executive vice president, and a board member all purchasing shares within 1 week. Each of these roles provides a unique perspective on the company's operations and strategic direction. When multiple insiders buy shares within a short time frame, it's seen as an even stronger endorsement. This coordinated buying can suggest a collective confidence in the company's future performance. There are several studies and academic research papers that have analyzed the impact of insider trading on stock performance and generally indicate that insider buying tends to be associated with positive future stock returns. To give you an example, Sahun's research indicated that insider buying is predictive of future stock price increases. The study showed that stocks purchased by insiders outperformed the market by a significant margin over a 1-year period. Another study by Rosef and Zaman found that insider buying leads to positive excess returns. It suggested that insiders have valuable information that is not yet reflected in the stock price, leading to profitable trading opportunities. Finally, I want to talk about insider selling. This often raises eyebrows in the stock market. When company insiders like executives or board members sell their own company's shares, this is often viewed as a signal that something might be wrong. But remember, the story behind each sale can be more nuanced than it appears. Let's explore why insider selling isn't always a red flag. First off, insiders may sell shares for perfectly legitimate reasons. Think about it. They might need to raise capital for personal reasons like buying a house or funding an education for one of their kids. Just like any of us, they have financial goals too. Secondly, insiders might be diversifying their investments. Their financial portfolios could be heavily tied to the company's stock. Selling a portion allows them to spread risk and have a more balanced investment strategy. Additionally, insiders might have insights into the company's future projects or developments that the public doesn't. If they're aware of a short-term hurdle that could affect the stock price, selling might make sense to them, even if it's temporary. So instead of panicking at the sight of insider selling, dig deeper, analyze the context, and consider the bigger picture. I hope you enjoyed this video. Feel free to share other useful websites to track insider trading in the comments. Happy investing, and until next time.